Good morning, everybody. How y'all doing? How y'all doing? How y'all doing? Yeah, man. Trying to get myself together here, man. Y'all file on in. Y'all file on in. Y'all file on in. While I get myself together. Good morning. Good morning. Good morning, everybody. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome and give you a nice hearty well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's Big Spider if you don't hablo Espanol. And if I get the right picture up there, I can let you know that you're now in tune to another episode of The Art of Reading. The Overnight Price Action Review. Let's see who in the chat it did. Let's get to it, man. Who in the chat? Got Here to Learn and Share up in here. We got Rhonda Green. It's a wonderful winning Wednesday. Look at the wordplay. Rhonda, you are a word wizard. Wonderful winning Wednesday. What's up, love? What's going on, E-Rock? What's happening, Tish? Buenos dias, Valdez. Buenos dias. Oh, I already said Tish. Hey, man, let's go ahead and get to it, man. It's going to get to it. We're going to get right to it. Let's get it started. Let's get it started in here. Looking over here. We started the day right around here. No, that's 4:45. Right there. That's 6 o'clock. That's 6. Hey, why am I why does that look different? Hold on. When I marked that, it was no, let me check this. Because when I marked it, it was a very thin line. Oh, look how it's just sitting on that little thin line too. It was a very thin line, but now I'm seeing a difference in between these 15-minute candles. Let me come back here and check this out. See right there, that 455 candle. Yeah, see that 455 candle to, oh, I got it. How did that get over there? That shouldn't be. That should be like that. All right, that should be like that. I think the NQ was the one that had no difference. Yeah, the NQ. No, the NQ had a little space there. Yeah, the NQ had a little small space. I wonder why I had it like that. Did I see something on the 1 minute? What made me mark that wrong? Yes, it was 1 minute. I put it at the top of that candle instead of the bottom. So that's what it was. That's what it was. I probably just marked it there, moving fast. All right. Let me get this together. Oakley dokley now. Oakley dokley now. Oakley dokley now. Now let's get this together. Okay. All right then. Let's zoom out a little bit so we can see the landscape pop out here to 60-minute candles. 60-minute candles. We got us a day. Since it's a daily gap here, I'm going to get rid of that 4-hour gap. All right. Since we got us a daily fair value gap down there, I got rid of the 4-hour because I don't want all that junk overlapping. So right now we are resting in the premium of the range from yesterday's high to yesterday's low. Right. We are now residing in the premium of the range. Throughout the night, we were hanging out around equilibrium to a slight discount in between today's new day opening gap and yesterday's new day opening gap. Yeah, we was hanging out in that range right there around equilibrium. Let me turn on my fancy dancy here. So it was right here around equilibrium, right there of the daily range. And then you can see where we was, ping-ponging between the low of today's new day opening gap to the high of yesterday's new day opening gap to the low of today's new day opening gap to the high of yesterday's new day opening gap to consequent encroachment, creating a 1-hour BISI, then pushing up above the high right there, taking out that high. So now that's where we are in the landscape of things. So now let's go into our 15 minute, and these are 60-minute candles, by the way. Let's go into our 15-minute candles and 15-minute candles, and let's look at what price did overnight. Don't need the Fibonacci tool anymore. Okay. So we opened up yesterday with a slight gap down at 56.1950. Let me get me off the screen so I don't block nothing. 56.1950 is where we started the day off. Make these nice and big for those that's watching on devices or those who have bad eyes like me and you're watching it on your television. Now you got a nice big screen to look at. Then we so we gapped down slightly, and we took out this time-based liquidity. We got a low that we took out at from 3:45 p.m. So it's time-based liquidity. Right. Took this time-based liquidity from 3:45 p.m. Okay. M15. 3:45. Right. Stretch that out so we can see that. You know what? I'll do this. Do one better. Put it on the bottom. Oakley dokley. Right. So we gapped down, took time-based liquidity from 3:45. Then we set low. Right. And that we see that we never came back to. Right. So we're going to make this the initial sell side. Right. Set a low that we never came back to. Jesus Christ. All right. And then we move back up. Repricing, offering buy side delivery to the gap coming up, failing to hit this SIBI that was created with the gap down in that first move, failing to hit that SIBI there. Trying to find a good spot to put the name. I'll be wanting to overlap with the wicks. It'd be hard for me to see it when it be overlapping with the wicks like that. Okay, so push back up, did not hit the 445 SIBI, which was created when we gapped down, and wick back up, failing to hit the across the low of the 430 candle, creating a SIBI on the 445 candle. Then we back down, bodies of the candle respecting consequent encroachment of the new day opening gap. Then we opened up, pushed up to consequent encroachment of that 445 SIBI, closing above the new day opening gap. Then we wick back down, touching the sell side that we had just swept again at 56.1850. Bodies of the candle respecting the new day opening gap, closing above it. Then we dip down one more time, well, two more times actually, over the next 30 minutes, came back down, touched that low one more time. Bodies of the candle closed as a doji, indecision candle. And then we had a slight gap down and pushed up, touching the consequent encroachment one more time, looking like we took out that high. Let's check that. Nope, equal highs. So that candle there's high is at 56.22. This candle here is highs at 56.22. Right, made equal highs there, equal high lows there. Then we open up and displaced away from the new day opening gap, closing above the full 15 SIBI, creating the inversion fair value gap and creating a BISI on the 8 o'clock candle. Right, creating a BISI on the 8 o'clock candle. So this is our first imbalance from the session. Right, it's our first imbalance from the session. So we're going to get rid of that 445 one because I don't want them overlapping. Bullish fair value gap, first of session. All right, so Mr. 445, you are out of there. I don't want y'all overlapping, but you see the confluence. We got the confluence there. Well, I'll leave that for a second while I name this. All right, fair value gap, first of session. Oh, I already did that. Double click, and that was 8 p.m. All right, so our 8 o'clock BISI, first of session, and the 445 inversion fair value gap are giving us some confluence for potential support, giving us confluence for potential support. And mind you, the chart would look like this when they're created. Right, the chart will look like that. Hey, let's do it like this right here. Okay, we're going to do it like this. Instead of just looking at it, we're going to do it like this. This. Oh, looking at y'all. Some more people came in. What's up, Sonya? What's up, the Blackout Davis? Hardest lieutenant on the tank, the Russells. What's up, Kashaya? Seeing a few more people pop in. I glanced over there and I seed something. I had seed something that caught my attention. Now let me get back focused. Let me get back focused and stop looking over there at y'all. Okay, so we wicked up on this 8:15 candle, touching the lower quarter of the new day of yesterday's new day opening gap. Look like we created, yep, equal high right there. Created an equal high from the 4:15 candle, right? Created an equal high from the 4:15 candle. Right. And then now we can see we got the confluence here of the inversion fair value gap and the BISI. This is the first BISI of the session, first BISI of the Asian session, first BISI of the hour. So it's like first BISI of an hour, first BISI of a session, first bit, you know what I'm saying? It's like confluence there, like some confluence there. And then so now I'm going to remove this one because I don't like the way it looks. All right. And then let's move forward. All right. So we pull back down, respecting the 8 p.m. BISI. Right. Came down respecting the 8 p.m. BISI, dipped down below consequent encroachment down into the lower quarter, and then retrace back up. Nice respect of the BISI there. Looks like all eyes are on the relative equal highs at this time. So we push up, take the relative equal highs, come close to consequent encroachment of yesterday's new day opening gap. Right, we have a volume imbalance here, created a volume imbalance there. All right, we got a volume imbalance here. So we got a bullish volume imbalance created on that move. 15-minute. Okay, created a bullish volume imbalance there. And then we put another candle on there. Okay, so come back down, dipping down into this down close candle. What's the open of that candle is 56.2350. The low of this 9 p.m. candle is 56.2350. Came down to the opening price of this down close candle. Nice respect of it, wicked off of it. Right, so we displaced away, pulled back down into the 8 p.m. BISI, displaced away again, taking out the relative equal highs, pulled back down into the down close candle, acting as support, wicked off of it, end up creating a doji, but it was a large pullback down to the range, right? Pulled back down well below the volume imbalance, and then closed right where we opened. Pulled back down once again, dipping down below the volume imbalance. Bodies of the candle closed at the low of yesterday's new day opening gap. We're starting to pull back into the range, so we've got a closure below the relative below the high, indicating possible that we're about to do some sort of retracement because we traded above the equal highs, wick below, and then now we close back below the equal highs, hinting at possibility of a retracement. Okay, we get the retracement, came back down to the high of the 8 p.m. BISI. Now we have a bearish volume imbalance here, there, bearish volume imbalance here. Just change this to, it's easy if I just do this. Bearish volume imbalance there. came back down to the high of the 8 p.m. BSI. Right. Traded back up to the volume imbalance. Right. Made an equal high to the prior candle and closed at the same close. So at a slight gap up, we gapped up from 56.23.25 and opened up at 56.23.50. So one tick gap up, pushed up to the volume imbalance, set an equal high to the prior candle, then came down and closed in the exact same place as the prior candle. Right, so respecting the volume imbalance. Again, the closure on the 915 candle back below the highs after sweeping them, alluded to possible retracing back, and then we retrace back, and the bodies of these candles are respecting the down close counter there. Right, so all these got this, the 815 candle, the 830 candle, the 930 candle, and the 945 candle, the buy, all equal bodied candles right there. Push down, dip below, consequent encroachment of the 8 p.m. BSI. Bodies of the candle still respecting the 8 p.m. BSI. Still no imbalance. Still no imbalance to think of coming down this way. The only thing that we have thus far is that wick, right? So consequent encroachment of that wick is at 56.24.50. Pushed up above consequent encroachment of that wick, body of the candle stopped right at the volume imbalance on this 10-15 candle. All right, so we're in the 10 o'clock hour here. So when the 10 o'clock hour opened up, we dropped down and took out the low of the 9 o'clock hour. Let's mark that. We didn't mark any of that. So we took out the low of the 9 o'clock hour sell side from 9 o'clock. All right, so we took out the low of the 9 o'clock hour. And over here. All right, so the low from the 8 o'clock is inside the new day opening gap. All right, the low from 7 o'clock and 6 o'clock is still the lowest low. All right, and then this right here is the high from the 8 o'clock hour. Hate when I do that. All right. So when we open up at the 10 o'clock hour, we dropped down, took out the low of the 9 o'clock hour. So this is the high of the 9 o'clock hour, failed to take out the 8. Then this was the low of the 9 o'clock hour. We traded back up into the volume imbalance. So open up at 10, drop down, took out the sell side below the 9 o'clock hour, drop down into the below consequent encroachment of an 8 p.m. BSI, the first fair value gap of the session, and traded back up past consequent encroachment of the 945 wick up into the the low of the 15-minute volume imbalance created with the 930 candle, between the 915 and 930 candle. All right, so we wick above the volume imbalance one more time, touching yesterday's new day opening gap one more time, creating equal highs here with the 930, 945, and 1030 candle, right? And then pull back down into this down close candle from 10 o'clock, respecting that, trading back up. Then we poke up above those equal highs and touch that relative equal high one more time, the one that we traded above back here on the 845 candle, traded above these equal highs here between the 930, 945, and 1030 candle. And then the bodies traded back down, respecting still the volume imbalance between the 930 and 915 candles. All right. Then we go up and take out the high from the 8 p.m. candle, the swing high that was made when we had our pullback. So now we see here we have the expansion taking out external liquidity, right? And then pulling back that, well, we took out external liquidity here, right? So we came up, took out external liquidity, pushed up again, took out some more liquidity, then traded back down into internal liquidity, right? So it was move here, external, took out external liquidity here, right? So we engineered liquidity, right? Took out external there, pulled back down to internal, right? Pushed up, took out external, pulled back down, and swept, well, not swept, but went back into internal liquidity, their internal liquidity there, and then the imbalance there, right? So we got a swing low here inside the range, and then we came back down into that, and plus we traded below that hourly low. So we taking out internal liquidity there, internal liquidity there, and then we expanded back up, took out external liquidity again. Okay, internal, external, internal, external. All right, so now this is, that's 11. Okay, so that was the 10 o'clock high. So open up at 11, take out the 10 o'clock high. The 10 o'clock high was there with that relative equal high and the overall high that we had set at 8 p.m. All right, so we got a new Asian high, right, from the 11 p.m. candle there. Made another new high, right, continuing up. Now we've created a BISI there. Yes. We got a bullish fair value gap on the 11 p.m. candle. Made a new high. Now we've that 11 p.m. candle traded up to consequent encroachment of yesterday's new day opening gap. This 11 got a volume imbalance there, so we incorporate that. This 11:15 candle came up and closed above the consequent encroachment of yesterday's new day opening gap and created a BISI for the 11 p.m. candle. All right, we wicked up, took out the high one more time, got a new high, right? New high on the 11:30 candle. Traded back down into the 11 p.m. BISI. Got a volume imbalance there in between the 11:30 and 11:45 candle. Now it is midnight, and the midnight open is 56.2650. Bodies of the candle still respecting consequent encroachment of the 11 p.m. BISI. Got equal lows on the 11:45 and 12 o'clock candles. Consolidating right there around equilibrium of yesterday's new day opening gap. Right. Push up into the wick of the 11:30 candle. Still bodies of the candle still respecting the 11 p.m. BISI, and we're still hovering around consequent encroachment of yesterday's new day opening gap. Same thing. Took out the high on the 12:45 candle. Bodies of the candle closed right at the high of yesterday's new day opening gap. Body kind of closed right at the high. Yesterday's new day opening gap. Took out the high again. Set a high again. Where? Traded down into this volume imbalance. Right, we had a volume imbalance there that we traded down. Had a volume imbalance there that we traded down into. God dog it, come on. Right here. Traded down to the high of that volume imbalance there. Set a new high there. Had an immediate rebalance there. Had an opportunity to create a BISI here, but this candle came down and did not create that BISI. That should say bullish. Okay. The market is open. The market is open. The market is open. If you're going to trade, please trade safe. If you're not going to trade, please take copious amounts of notes so you can go back and study what you saw today and apply to your future trading endeavors. Thank you. Enjoy your day. Do you remove the bullish volume imbalance once the bearish one forms or once it traded through? Nah, I leave them on. I leave them on there until I feel like it ain't relevant no more. Right. I'll leave it on there till I feel like it ain't relevant no more. Like, if we got a bearish, it's just, how sloppy I want the chart to look. Like this bearish volume imbalance there. Right. We hit it, then closed above it and started moving up. Right. So now I probably will remove that, or I might not remove it until I get finished trading. Like, like anything that I be marking while I'm actually trading live, like lower time frame stuff, I keep it there until it's like not relevant no more, or if it's like in my way, I'll take it off. Like if this right here was in my way, clouding up what I need to see, once once we got this body closure above this bearish volume imbalance, and then we continue to move up, then I will take that off, because it's like price has redelivered, offered delivery to it there, and then closed above it, and now it's not paying it no attention right now. So, but I leave stuff on the chart until I feel like, okay, it's not in play no more, or and then once I finish trading for that session, then all that extra stuff, I just go ahead and take it off, because it be outside of my TDA folder. My TDA is the stuff that I'm looking for, that I want to see reactions to. And then once the session start, then I start putting stuff on there. And then, once I don't need it no more, then I just take all that stuff off. But I leave it there, until it's, no longer needed. And volume imbalances, they don't, like once you lay a body over it and start moving away from it, most time, I'll be done with it. But I still like to keep it around until price start moving away from it. Then I take it off. But like with fair value gaps, I leave them on there until like the end of the session, or until we like have like a confluence of another one, because I don't want to have them like how I took the inversion fair value gap off and just left the first BISI from the session, because this one here for me has a greater importance of supporting this session than this inversion fair value gap. And then I look at it as, okay, the algorithm laid this important one here to replace this inversion fair value gap, because the first one of the session is important. So the algorithm say, okay, I'm using this inversion, so I'm going to lay this important first one there to replace this inversion. And then so boop, take the inversion off and just keep the first of session now, because now this is my support, instead of the old inversion. Like, so it's just, you have to, like, until the algorithm ain't using it no more. You have to get used to, what I'm saying, what the algorithm gonna use over and over and over and over, what it's gonna use one time, what it's gonna, stuff like that. All right. So hopefully that helped. All right, let's move along. All right, boom. So on the 130 candle, get a nice drop down, coming down to the low of the 11 p.m. busy, dropping down below the midnight open, taking out those equal lows that we had set between 11:45 and 12:15, right? Came all the way down to the low of the 11 p.m. busy, also coming down into this is this one of the tricky ones where, since we got a lot of movement in here, right, you can look over here at this move here and find a breaker and a mitigation block, right? You can find a breaker and a mitigation block. And then in the sense of how Michael teaches breakers, right, all you need is a high, low, and a higher high in the way that he teach it, right? A high, a low, and a higher high in the simplest form would give you a breaker in the way that he teaches it, right? And also the way he teach mitigation blocks. If you come from this low to that high, right? If you come from the parent move here, low, higher, high, low, high, higher, low, high, right? That'll be a mitigation block, right? But if you just come from here, right? This high took out that low, right? Giving you a breaker. So that's why I say, like, if you beat these counters up enough, you can find what you want to find. And then you'll start overthinking it, and you're not focusing on the fact of where is price trying to get, where is price trying to go. Let's not fight over the semantics or the small little, yeah. All right. So drop back down to the low of that volume imbalance there. All right. Came back down to the low of that volume imbalance, came back down to those equal body candles, right there. Then we came back up and closed just below consequent encroachment of that 11 p.m. busy, creating a SIBI right here with a volume imbalance there on that 130 candle. All right. And since we got that there, I'm going to move that volume imbalance out of the way because I don't want to have it like overlapping like that. So now we got that SIBI, that 130 SIBI, incorporating the volume imbalance in between 130 and 145. Came back down to the low of that. I could move this. All right. We drop down into the bullish order block here from 10:30. Bodies of the candle closed right at midnight, right at the midnight price. All right. Okay, push back up to the high of the 11 p.m. SIBI. Right, body of the candle closed at the low of the 11 p.m. SIBI still, and we traded up to the high of that volume imbalance in between the 130 and 145 candle at the low end of the busy, SIBI. So we haven't actually touched the actual SIBI, but we're inside the range of the inefficiency because we included the volume imbalance in between the 145 and 130 candle. Right. So we're inside the range of the inefficiency, but we haven't touched the SIBI yet. Right. Bodies of the candle closed at the low of that 11 p.m. BSI. So we gap down on the 230 candle, right? Creating a volume imbalance, the bearish volume imbalance there. Let me see something. Just take this, bring that back. Oh, I guess I could have just copied this one because that's bearish already. All right. Still taking that, took out that low, took out that 2 a.m. swing low there. All right. So on the 2 a.m. candle, we dropped down below the low of the 1 a.m. Right. So we took out the low of the 1 a.m. candle when we opened up at 2. Right. Took out the low of the 1 a.m. candle when we opened up at 2, dropping back down into the consequent encroachment of that prior down close candle that we was watching. Okay. And that's also looking like it's roughly the mean threshold of that order block. And then we gap down, creating a 15-minute bearish volume imbalance on the 230 candle, dropping down, dropping below that low of the 2 a.m. candle. Bodies of the candle respecting that consequent encroachment of that order block. Yeah, so create another volume imbalance there along with a SIBI. Let's do this right here. On that 230 candle. Right. 230 candle there. Then we set low here. Let's do this. There you go. 10 o'clock low. All right. All right. So that's 10 o'clock low right there. So that's our Asian low right there. That's the Asian low right there. So now we're inside the London kill zone, came down and touched the high of that first BSI. All right, came down, touched the high of that first BSI. Okay, traded down the consequent encroachment of that first BSI. Traded back up into that 230 SIBI, right, touching the 1 a.m. low right there at consequent encroachment of the entire imbalance. Entire imbalance includes the SIBI and both volume imbalances on the top and bottom. Okay, we touched the high of that first 8 p.m. SIBI, traded back up, closed above consequent encroachment of the 230 SIBI right here. So on 3 o'clock candle, we open up, drop down below the hourly low of the 2 a.m. candle. Right, drop below the hourly low of the 2 a.m. candle. On the London open, London open was at, let's mark it. I'll mark it out. Okay, I thought I had one there. Maybe I don't. Maybe it's on this line here. I got London high, London low. Okay, we're just gonna put London open. Traded back up to the low of the top volume imbalance and closed above consequent encroachment right at the low of yesterday's new day opening gap. Pull back down below London open, drop below London open, pushed up, closed above the 230 SIBI, creating an inversion fair value gap. Pushed up and touched the midnight, pushed up, touched midnight, quickly rejected back down, closing below the London open on 345 candle. We also pushed into this up close candle there at 2 a.m. when we pushed up into the midnight price. Open up, touch the London price, drop down, taking out the Asian low on this 4 a.m. candle. Right, took out the Asian low, traded down into the below the first fair value gap, bodies of the candle, respecting it, trading, closing well back above it. So Asian low has been taken. So now we got, as of now, this is our London low here. It's our London low as of now. Okay. We went all the way back up to the 11 p.m. BISI into the rejection block here. Failed to take out the high from 345. Traded up into that rejection block. Then came back down, creating a new low and stopping at the high of today's. Create a new low at the high of today's new day opening gap. Bodies of the candle closed at the low of that first BISI from 8 p.m. Created a new low at consequent encroachment of today's new day opening gap. Closed back above that first 8 p.m. BISI. Bodies of the candle respecting it. Came back down to that low. Bodies of the candle closed at the high of the today's new day opening gap. Okay. Created a new low on the 5 a.m. candle. Right. Bodies of the candle closed back above that first BISI. Your Walmart curbside pickup is ready. Please let us know when you're on your way to the store. All right. I got caught up on some family tech stuff. So now we're consolidating here right around the first busy from 8 p.m. and the new day opening gap. Just engineering some liquidity right here inside that okay. All right. Same thing, still consolidating there. Drop down back to consequent encroachment of today's new day opening gap. Okay. So now we push back up, closing above the London open, touch the low of that 230 SIBI. All right. We got blast off, traded all the way back up to the high of that inversion fair value gap from 11 p.m. Right, the 11 p.m. inversion fair value gap traded up to the high of it, back up to the high of that volume imbalance. That's part of the 130 SIBI. Right, the lower end of that. Remember, the lower end of that was the volume imbalance. So we still haven't touched the actual SIBI yet. The actual SIBI low is there. All right, but the entire inefficiency is there, including the volume imbalance. So we're right at the high of that inversion fair value gap from 11 and the high of that volume imbalance in between the 130 and 145 candles. All right, so we take off, blast off, bodies of the candle close at the high of yesterday's new day opening gap, creating a BISI here. So now that we have a BISI here in the same place as this inversion fair value gap there, now I'm going to move this over so it ain't so much junk on the chart because they're in the exact same place. Right, so now we're just going to make this green and change it to 6:30 a.m. 6:30 a.m. Make that a plus and make that green. All right, make that green there. I got a lot going on, so I'm gonna move this out the way. Wait a minute. I'll leave that there. Right, because that was the first one of that 11 o'clock hour, so I'll leave it there. All right. So take out the high that was set on the I had 12 o'clock. That's actually 1 o'clock. That's the 1 o'clock candle right there. I had that set for 12 o'clock, but that's actually 1 o'clock. So now I took that high out. And that's from 7 a.m. Okay. Creating BISI there. Right. That BISI is way up there in the premium. So I got a lot going on, so I am taking this off. It's too much junk on there right now. That BISI is way up in the premium. So y'all know what we say about that. We're anticipating that to become an inversion because that's treetop tall. And we created a BISI right there on that 645 candle. All right, let's see how that plays out. All right. Okay, full counter down. Came down, closed right there inside the top quarter. Pushed back up, took out that high. Sneaky like on that 730 counter, took out that high. Quick little wick up there at the 730 open. right? At the open of that kill zone, right? That 730, opened up at 56.2850, snuck up there, bow, took that high out, came back down, closed in between 25% and 50%. That's consequent encroachment. 25% would be up there somewhere. So closed in between those two areas, right? Push down to the low of the fair value gap and push back up, poked outside of the yesterday's new day opening gap one time. We came in, pushed down to the low of that 645 fair value gap. Bodies of the counter respecting it. It's a very strong fair value gap to be up in the premium. Took out that high once again on the 815 candle, right? We did not create that inversion on there. That held, that candle held. So right there, this right here is showing us that the algorithm is looking at this right here as a balanced price range and has no intentions of coming back down, and was using this area there as the range that it was dealing in, right? Had no intentions of coming back down to that area. Here, had all this back and forth delivery when we was engineering liquidity. Then we left that area there, right? It's treating all of this as a balanced price range, and that BISI was holding up, right? And right here, man, when I was like, hey, this is becoming a very strong fair value gap right there. Well, that right there was a clue that the algorithm was still seeking higher, wasn't trying to go down. The bodies are telling the story right there, right? Took out that high. Get out of here. So that's on the 815 candle. Right. Potential to make a BISI, large candle there. Right. Came down. Steady making higher highs on that 830 candle. Okay. Got us a BISI there now. I will take this down here. I don't need that. No one got too much going on. I'm gonna delete that. Okay. $8.15. Oh man, at 9:58, almost 10 o'clock. All right. Come down, close at the low, that 8:15 BISI. And okay. I don't know what I hit, but we dropped down to the 645 BISI in the discount. Went back up, taking out the 830 high, and then that's where we are now, right? Did not create that BISI, came down with immediate rebalance, and that's where we are now. And that is the overnight price action review. And we walked it through candle by candle so that we can be surprised when the candles react. What's going on over here? Okay. All right, man. Hopefully y'all found this helpful. That's all I got. Unless somebody got something for me, we're gonna go ahead and call it, man. Unless somebody got something for me, we're gonna go ahead and call it. You're welcome, Kashaya. You're welcome. I'm glad you found value in it. I tried to talk through it in the way that I actually watch price. So I'm glad you found value in it. I don't see nothing in the you're welcome, Deborah. I don't see nothing in the chat as far as questions. So we're gonna go ahead and call it. Take me a sip of this high quality H2O. Hey, y'all do me a favor real quick. Y'all do me a favor real quick. Can somebody tell me what's the difference in the time? How much of a delay? Looking at this countdown right here, right? Looking at this countdown right here. How much of a right here, down here in the corner, not that countdown, down here in the corner. Let me blow this up. Let me blow. Can I blow this up? Yes, I can. See this time right here? How much a delay is it? Right? Because right now you see mine says 10:01 and 2 seconds, right? How much is the delay is it between yours and mine? If you got like seconds, I don't know if you can see like not in the seconds, but below the seconds, about 10 seconds. All right. So it's about a 10-second delay. Okay. All right. Appreciate that, Stacks. Yeah. So what like if you looking at yours 7 seconds, Deborah? Okay. All right. About 10 seconds. So all right, it is very between, you know what I'm saying, but roughly around 10 seconds. 7. Deborah got a fast connection, I guess. So it's roughly around 10-second delay. Okay. Between 7 and 10. All right. Anybody got more than like 10? Anybody like around the 15, 20-second range? All right. And then a lot of times what be happening, like it don't be like on live and you be like 25, 30 seconds behind. It don't be like on live. It be like the live be grayed out. What's up? All right. Yeah. Tish must got Xfinity. She said it's 13 seconds. Seawalk got 5 seconds. That boy got broadband for real. Tish got Xfinity. Very helpful, especially when I go through it before the live and then see if I get the same thing. AT&T, yeah, AT&T. I knew it. There had to be somebody. There had to be somebody with that garbage. All right. Okay, y'all. Gagillionaires. Okay. Hey, that's it, man. I appreciate y'all for hanging out with me. I'm glad y'all found some value in this. If y'all like this format, we can let's take a vote real quick. Do y'all like this format when we go through it candle by candle and look at it, or do y'all like the other format where we just leave everything on the screen and talk about it? If y'all want to go to the candle by candle like I just did, put a 1. If y'all want to do it the old way where we just leave everything up and just talk about it, put a 2. Okay, then mama dropping words of wisdom this morning. Dropping words of wisdom. All right. It's a resounding 1-1-1. So candle by candle is what we're gonna do. right? Candle by candle is what we're gonna start doing for the overnight price action review. Hey man, I appreciate y'all for hanging out with me. Again, if you're gonna trade today, please trade safe. If you're not gonna trade, please take copious amounts of notes so you can go back and study what you saw today and apply it to your future trading endeavors. Until the next time I decide to get on Algos in there and share my thoughts on this thing they call price action, it's your boy, Timothy Lee Rogers Sr., aka Aranya Grande. That's Big Spot if you don't upload Espanol. Y'all be safe out in these trade streets, man. Gone.